Newsprints that we have this week are the core CPI and CPI month over month and year over year, and the producer price inflation numbers going into Wednesday. And the reason that these prints are so important is because if there was any effect from these higher oil prices on the markets, this is when we would start to see it. And why that is going to potentially create an environment where, again, we are inside of kind of a no man's land right now on the indices. We've completed all of our targets from the perspective of the extensions. And so when you're in this moment between a profit target and a next measured move, if you have an environment where inflation could potentially be creeping higher and you get confirmation of that, I think that that is what you could make a case creates our pullbacks here as we go into the week. One of the really interesting things that happened last week is the rate cuts are completely priced out of the market all the way to December. But there was a brief moment where there was actually a rate hike being priced in to December of 2027. And the question is one, do those PPI and CPI prints come back higher than expected? I think you could argue that there's a very good chance that they do. And will a rate cut, of course, rate cuts have been priced out of the market, but will a rate hike be started to price in as we go into the end of the year of 2027? Now, that is a long, long ways away, but that long, long ways away, the perception is still no cuts or a pause, and a rate hike, even if it's a year and a half out, is not priced into the market. We're looking at our regime tracker here, and from Monday's close, May 4th, up until we went into the end of the week, we were going in the direction, and though the rate of change is what is important, in the direction of a boom. We were going out of the bottom left of this quadrant, which is a bust, and we started moving towards our boom. So we have May 4th, May 5th, May 6th, still moving on that direction, and then there was a stall on Friday, where the 7th, we were right on top of the 7th here. And again, what's going to be really important as we go into the close today is if we're still moving towards boom, or if we're just standing straight sideways here on this quadrant, that is very bullish. But if we dip back into a direction of the bust here, I think that would also create an environment where we're in a no man's land and we've lost momentum for a very short time. And that creates an environment where we start to see pullbacks. The dollar correlations were deeply, deeply negative as we went into the end of last week. And we even set a record on the Russell, having a negative 0.91. So it's a new low for a 52-week rolling 30-day correlation. The reason that is important is because the dollar is still inside of a downtrend. Now, this is fueling the indices, the currencies, and the commodities higher, as long as we're below these 98 153s. As you can see, we are, and we're continuing to weaken. And so that continues to create a tailwind for the indices. Dollar down, indices up. Dollar down, currencies up. Dollar down, precious metals up. And that's probably where the most exciting part of our markets here comes from, here coming out of the end of last week and the beginning of this week. The only market that beat silver. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.